Assalamualaikum warahmatullahi wabarakatuh. Thank you for giving me some chances to presenting my paper, which titled The Negative Effect Inflation Interaction Between Stock Selection Skill and Fund Size to Mutual Fund Performance. Introduction. The negative effect of inflationary movement that interact on stock selection skill of investment manager reduces the level of performance of stock mutual funds. Many stocks are affected by uncontrolled inflation, which causes the market value of investment in stock to fall. This is by investor only surviving, but it is also possible for investors who have sufficient funds to make purchases at the lower stock prices that can provide high return expectations in the future. Investment managers should be able to immediately shift the fund size to be more liquid and profitable into other types of fund, because the impact of increased inflation on the fund size owned by the mutual fund company interact to reduce the performance of the mutual fund. The decrease in the size of the fund size, which is affected by the negative impact of inflationary movement, weaken the increase in the NAV of mutual funds, which is an indicator of mutual fund performance. We come to next slide, material and method. Investment, according to Thunder Lilin, is a current financial commitment undertaken with the expectation of future financial gain. The form in portfolio theory, according to Assis, makes the assumption that future return can be predicted, which may then be used to assess risk with changes in the current distribution. In a sense, portfolio theory can boost future profits while lowering the risk associated with the investment instrument. Freeman stakeholders theory is a theory that specifies which parties the company is accountable for in raising its value, which in this case is indicated by the rise in NAV value, resulting in a significant increase in the performance of the mutual fund. Mutual fund performance is referred to as a portfolio. Then, analyzes other variables along with the level of return achieved, such as the amount of risk involved. According to the following mathematical formula, the Sharpe ratio is used in this research to determine how well mutual funds have performed. You can see the formula, the mathematical formula. Next, the skill of investment manager to select the appropriate securities for their portfolio in order to deliver high returns is known as stock selection skill. In this study, the Treanor-Matthew ratio is used to calculate stock selection skill. We can also here see mathematical formula, and can skip. Using the funds in the managed portfolio and information from the security portfolio, the mutual fund metric known as fund size is calculated. In this study, fund size is calculated using the Treanor-Matthew ratio based on the calculation formula below. Loan NAV, an economic condition known as inflation occurs when there is an imbalance between the supply and demand for a good, with the latter leading to a propensity for price increases. Sample. Purposive sampling was utilized as the sample strategy in this investigation. Using these parameters, 67 traditional stock mutual fund companies served as the sample for this study from 2019 to 2021. Analytical method. The two analytical methods used in this study are moderated regression and descriptive statistics. The following describe the study's model. We can see also mathematical formula which describe the model. Descriptive statistic here, you can also see the median, the maximum, the minimum, and standard deviation in each variable research. Multicollinearity test, it is shown in table that there is no multicollinearity issue. This is evident from the VIP value, which is below 10. Heteroscedasticity test, the probability value of probability G-score is 0.0625, higher than 0.05, which suggests that hypothesis 0 is rejected and there is no heteroscedasticity issue. According to the estimation findings obtaining using the wide heteroscedasticity test. Autocorrelation test. The test result revealed that the DW value of 0.712767 is between +2 and -2, where there is no autocorrelation, which means hypothesis 1 is allowed. This is based on the calculation results of the Durbin-Watson value of 0.712767, which then correspond to the Durbin-Watson benchmark. Therefore, the autocorrelation in this research model is negative. We can see the next table which describe about the regression. We can see here the S-square of the research model is 0.826350. That means that 82% NNS. Summary. We came to the summary of this research. That the performance of mutual funds is positively and significantly impacted by stock selection skill. This encouraging research demonstrates that the level of performance that can be generated can be significantly higher than the level of ability or skill of the investment manager in selecting the securities to be included in the mutual fund portfolio, or what is known as the